Fast money tax season is always a daunting time of the year, but it is especially frightening for crypto investors who traded the crypto craze at the highs in December. Seema Modi's at the crypto desk with all the details. Hi, Seema.
Melissa, that's right. Experts say ahead of tax day, some retail investors are selling their cryptocurrency holdings to account for the capital gains they owe on last year's profits. If you're preparing for your return, it's important to know that the IRS labels Bitcoin and other cryptocurrencies as property, not as currency. And if you simply bought and sold Bitcoin in 2017, then the steps taken to file taxes on your holdings is similar to if you held stocks. For example, record your transactional history. This data includes when you bought Bitcoin, the spot price, and what date you sold it at. That will determine whether it's a short or long-term capital gain. Once that's taken care of, you fill out the 8949 form and a Schedule D. Any expenses accrued from account maintenance can potentially be deducted. Keep in mind, you may be taxed as high as 39% depending on your income bracket. Now, while the guidance from the IRS on cryptocurrencies has been limited, you could be subject to penalties like a sizable fine or a deficiency notice if you do not declare your holdings. In 2016, the IRS requested records from cryptocurrency exchange Coinbase from 2013 to 2015 for Bitcoin holders and found that less than 1,000 people reported their Bitcoin gains. Melissa?
All right. Thank you, Seema Modi. Well, if your crypto has had you freaking out this tax season, BK has got some tips to make sure you're in much better place for next year. It's time for a special tax crypto class. Take it away, Beeks.
Yeah, absolutely. So let's talk about next year because
sorry about that, guys. Had a little technical difficulty, but this is a very important video. I'm very glad to be able to share it with you guys. Very important that you file your taxes for this tax year, and if you didn't and you already filed your taxes, I would definitely make amends, unless it's a very small amount. If you bought less than a couple $1,000s worth of crypto, I still would do it just to be safe. But me personally, I made my first cryptocurrency purchase in 2017 in July. I did sell some crypto assets, so I probably owe some money to the government, and I will be filing my taxes on the 15th, and I will let the government know that that I have crypto. What is really interesting, and like I said, I'm going to talk to my tax professional and bring up this discussion for everyone, is your crypto that you send to your exchanges, so your Binance exchange, your KuCoin exchange. Now, they will not report anything to the government, right? So the question I ask you guys is, now how do you report that? Because anything you have in Coinbase, anything you have in Gemini, anything you have in Robinhood, the government will know, especially if you have more than 20,000. But it's just a question I want to bring up there, and I'm sure the government is planning for this. But when it goes to these offshore exchanges that have made it clear that they're not going to share any of the data with the IRS, my question is, what happens? And let me know what you guys think. I personally will not be doing any of this. I am going to pay my taxes. I have, unfortunately, real estate assets, so if I do try to do anything shady, the government will go straight for my real estate assets, so there's no point in me trying to dodge taxes, but just bringing it up there, and maybe there's other YouTube channels that might provide more information on that. But thank you for watching, and let me hear your comments, and I will talk to you again soon.